very short general business update. I will be here throughout the day, so you can come to me any time and any questions you might have. And my second part is an introduction to what you're going to see here today. Yeah, you all did see this some weeks ago, and I hope you watched the digital launch, which was, I think, pretty cool and extremely well viewed, if I say like that. So we're very happy with that. A week later, Volvo Trucks also launched the cap-over range, which means for the first time ever, within a week time, we have all new global range of trucks, which is actually pretty remarkable. So not only did we do these nice trucks in North America, we updated also the cap overs, and theme is the same as Kai said as well. Yes, we updated the electrics, but we also updated the diesels. And in the cab over range, they have improved fuel, or the new trucks will improve fuel efficiency 5%. Of course, our executives communicated this widely. This is just some snippets from their LinkedIn accounts. You see our CEO of the group, Martin Lundstedt. You see Roger Rand, the president of Volvo Trucks. So lots of attention here in the end of January for these new truck ranges, I would say, and the first time ever within a week's time we renewed our global range of trucks. We look a little bit for 2023, what happened for us. This is what we retailed, a little bit north of 30,000 trucks that gave us a 10.2% share. Not really what we have hoped for, but I'll come back to that. Here you see the progress or non-progress, or whatever you want to call it. But we have been pretty steady. Of course, that's not in line with our ambitions. And why didn't we grow? I would say we faced, among some others as well, continued supply chain disturbances, even in 2023. Some of you have also written about that, our VNR electric. We had a couple of recalls due to the battery supplier. We are now back on track. We are producing in a high speed, actually, every month now. And we were the leader last year, or in 22, when it comes to EMOB. We were number 2 last year. We just got the numbers this morning, but we have good hopes to regain our number 1 position here during 2024 when it comes to electromobility sales. We had, as many of you know, a strike at the Mack plants, and you also know that Hagerstown, that produces engines and transmissions not only for Mack but for us as well. That did hamper a little bit, but I would say thanks to fantastic work of volunteers, we managed to, I would say, minimize the damages for the Volvo plant here in Dublin, New River Valley. But we had some disturbances, of course, in the chain there. Heavier R&D costs, that was planned, of course, and we are investing more than we ever have done before in R&D. One of the samples for this is what you want to see here today, but more to come. On the positive note, we have improved our customer satisfaction throughout the years, and for us, that's a key KPI, because we know that drives customer loyalty, which means that in the end, it will also drive market share. Parts availability, we had some issues with the supply chain over COVID. After that, improved immensely in 23. We're happy with that. Our product quality on our legacy models, better than ever. And that also, of course, helps with improved customer satisfaction. These plants have been very, very good in delivering trucks. very good, but due to supply chain disturbances, it's a little hard to build trucks if you don't get the amount of parts you really need. We are still considered a leader in sustainability, and as Kai said, we have a very, very comprehensive agenda. Not focus so much on that today, but much more to come here. What do we see then this year? And a couple of, this is North America combined, so US and Canada. I would say in general, Canada is taking the numbers down a little bit, but this is US and Canada, and this is what we believe here for 2024. You see the GDP, and everyone are, I would say, pretty convinced it won't be a recession. We will have a soft landing. We are into that situation right now, but I will come back to that. You see inflation is much better. You will know about this. When it comes to the freight market, then, yeah, you see the graphs and the rates and so on. However, we believe that we are probably now on the bottom, and it will go up as from now. One measurement that is good, and here you see the spot rates year over year, and you see the spikes here, and you see where we are today. But I think we have passed the bottom. Spot rate is slightly improving, which is good, and that is a good indication. The analysis we have done, and now I'm talking about the total markets here, you see it is a perfect correlation here. It's just a lag between when you see peaks in the market in terms of retails, that's the curve, and the spot rates. So we know now, if we believe that this is a little bit dip in the market, it will come back pretty quickly. Why do we believe that? Of course, some are economic factors in society and so on. But we have said we believe this year will roughly be 270,000, give or take. I think maybe a little bit less, but that's there or thereabouts. But you also know that in 2027 we have much more stringent emission legislation. That will drive pre-buy in the market. 2026 will, if nothing else happening in the world, so to say, most likely be a record year for US and Canada in terms of the market. We truly believe that the pre-buy effect, because customers, they are not stupid, they did see what happens during COVID and so on. They will not wait until 2026 to buy units, because they probably realize that if we wait that long, the industry won't be able to supply trucks to that extent. Which means that the pre-buy will start earlier, and we probably will see that already this year in the back end and into 25 and of course 26. So it's a little bit deep in the market, but no dramatic changes. And if you see historically, if the 270 holds, it is still a very, very good market this year. So if you pair that with improvement in the general world economy and the US economy and Canadian economy and so on, I think we have some very, very good years. What's going to happen after 2026, that's, however, another story, because 27 will be a big hit due to the new emission legislations. And with that comes, of course, quite dramatic increase in the prices of the trucks. If we look to ourselves, I mentioned customer satisfaction continue to be a prioritized area for us. We definitely want to grow share now in the declining market. We are focusing, we will touch a little bit upon it, heavily on improving our services offering. And of course, we always have the retail focus. Our dealer network has improved a lot throughout these years. We have seen consolidation, meaning fewer owners. Some of the companies now are really, really big, and we are very happy with the dealer network we have today. continuing, and Kai talked about it, very, very important to us to continue to execute on our sustainability strategy. As our sustainability strategy, it's not just about producing electric trucks, rather than complete end-to-end program, if I say like that, agenda, in order to improve in all fronts. And last but not least, the topic of the day. We will start production here in the third quarter of the Volvo VNL. We plan to open up the order books roughly in April. A little bit, that means also sales start time. A little bit depending on the order book situation, phase in and phase out and so, but it's there or thereabout. And then we'll continue, we will produce trucks in the third quarter. That will hit our dealers and customers here in the back end of the year. And that's what we're going to talk about now.